Welcome back. We have set the stage officially for Australia with reflections on the release today of that consultation paper from Treasury. I'm sure that our speakers are going to have a few things to say. I would like to welcome to the stage our session moderator, Lisa Hornery from Kraken, who is joined by Angela Ang from TRM Labs, Jason Titman from Swyftx, and Delia Burrage from Catena Digital, which I think, Delia, you might want to share a little bit about that rebrand coming up. And also, I just want to thank Jason from Swyftx. We are actually hosting this event live in the Swyftx offices in Brisbane. So a lot of gratitude to our sponsors at Swyftx as well. So I'm going to bring them to the stage. Give me a second here.
Hi, everyone. Welcome. Thanks very much, Amy Rose. What a morning. Right. Just obviously, if you have been living under a rock, apparently there's some new draft legislation that just dropped this morning. So I'm just going to chuck all the panel notes out the window and rip them up because everything's changed since now. But I will say that it's great to see, and it's going to extend our financial services laws to those laws to the digital asset platforms, and it puts today's panel right at the coalface. I mean, we can't delve into the minutiae of it as much as we'd probably like to. It's a lightning round, 30 minutes, but what it can do is maybe we can just get some discussion points, some opinions from our panelists, and really just help to sort of see what's going on once we start analysing everything. Once the regulatory summit is over this afternoon, I think we'll all be going back and reading through everything. What I'm going to do is just do a quick intro of all our panelists, and then I think we'll head off. Firstly, I'd like to introduce Jason Titman to the stage. Welcome, Jason. Jason's the CEO and Executive Chair of Swyftx. It's Australia's leading cryptocurrency brokerage with over 1.2 million customers. Jason has served as a shareholder and senior executive in sectors including e-commerce, fintech, and DeFi. He currently serves on the boards of the ASX-listed fintech company Findi Limited, US-based RepShop Inc., and India's Transaction Solutions International Limited. He's passionate about giving back. Jason serves on several not-for-profit boards and charitable foundations, with his focus on expanding access to quality healthcare and supporting attainment at schools and universities. You're an avid sports enthusiast, Jason, and you dedicate your time to encouraging athletes of all ages and levels through your role as a board member of the Australian Sports Foundation. Welcome, Jason.
Thank you.
Second off the mark here in our lightning round, we have Angela Ang. Angela, welcome. Angela leads Asia Pacific public policy and strategic partnerships for TRM Labs. Prior to TRM, Angela spent over a decade at the Monetary Authority of Singapore, where she held a diverse range of roles in regulatory policy, financial supervision, business development, and consumer education. It's giving her a deep insight into the full gamut of policy-making considerations for the global financial regulators. Angela was recently recognised as a LinkedIn top voice for finance in Asia for her thought leadership on digital asset developments in the region, and she also holds an MBA from INSEAD. Welcome, Angela. And last but not least, rounding out the pack, we have Delia Burrage. Welcome, Delia. Delia is the Chief Operating Officer and General Counsel of Macropod Global, which you otherwise may know as Catena Digital Pty Limited. Macropod's the issuer of AUDM stablecoins and Australia's first licensed stablecoin issuer. You specialise in making complexity manageable, Angela, by aligning legal, risk, and operations so teams can move fast without breaking things. I feel like this is your life. I should have with 2 decades in top-tier firms and banks and hedge funds across Asia Pacific, you've led product launches, built risk and compliance infrastructure, wrangled M&A deals, and nurtured startups. So thank you for bringing your steady hand, a global view, and a firm belief that the future money is digital to the stage. That's everybody. So I think we'll just delve straight in, shall we? We're going to start by really looking at the state of play, just sort of to make things easier for you. And Jason, I'm going to pose this question to you. Where are we in Australia in terms of crypto regulation maturity? I know that this has all come out this morning, but does this represent a an advance for us, or are we still sort of losing a bit of steam compared to our peers?
Thanks, Lisa. And I think I'd say, yeah, well, haven't we come a long way in a week? They say a week is a long time in politics. We see that all the time, but I think a week has really been a long time or quick succession here for our industry. Look, we'll still say that I think Australia is currently 3 to 4 years potentially behind some of the leading geographies that are doing a lot of work in this space. US, EU, Singapore, UAE. They're all addressing it in a different way. But the thing is, they are actually getting things done. I do think, though, we should acknowledge credit where credit's due. And to your opening comments and mine as well, in terms of a week's a long time. Last week, ASIC did come out with a paper around stablecoins, and I think Delia will speak to that a little bit later. I think it could have been expanded, but hey, it came out. And I think today the consultation paper for the digital assets platform, which we've been waiting on for a long time, has finally come out. And I think credit where credit's due, because the government, I say, has effectively only been the new government for 8 months. So I think we should acknowledge that as an industry. But to your point, where are we in the global regulatory landscape is we have to be going quicker. And that's something I think the messaging to our regulators and to the government needs to be. We've got to be going quicker. We don't need to be seeking perfection. And I think that's a problem where we have to acknowledge that governments and regulators just cannot and will never stay up to date or be able to legislate quickly enough for the way tech and private practice. But taking 7, 8, 9 years is just way too long. So I think seeking perfection is something that I would encourage them as we move forward not to try and do. And I think we've probably seen that in some of the other regulations, in the other jurisdictions as well. I think also, as I move around the world now and as Swyftx starts to expand, I do get the opportunity to engage with regulators and see their interaction with the industry in other jurisdictions. Look, regulators have a job to do. But what I will say is that I find that regulators in a number of the other jurisdictions are looking at it. How do we get to yes? How do we get there first? And from a position of building that innovation piece, how do we engage with industry, not trying to get entrapment and those sorts of things? So, I would encourage us to look at the frameworks at which we're approaching the industry, because other regulations, their regulators are obviously getting the message from the top down. And I'm not just talking about the US here. They are actively not only attending events or conferences and sessions such as this, but they're engaging with industry, both publicly and privately, in much more of an open dialogue. How can we help? We know you're trying to do the right thing. And I think regulators have got to get better to identify the good operators and the bad operators. I think to the Assistant Treasurer's comments, Dr. Daniel Milano this morning, to acknowledge he did mention that and he called that out specifically. And I think that's really important direction. What else, just quickly, we need to fix this disconnect, and I'm going to call it out as a disconnect between Treasury and ASIC in Australia. There clearly is, they're not on the same page, and that's just not helpful. Okay, as an industry player, it's not helpful, but to the consuming public and investing public, it's not helpful. But to Australia, as Australia's economy, the government is out there trying to fix productivity. You don't fix it by having public spats between different departments and stuff. So they've got to get on the same page and be heading in the same direction. So I think we've come a long way in the last week, but we absolutely have to continue that. And like all things, the proof will be in the execution. So as a quick opening summary, that's how I would position our current industry and how we fit with broadly globally.
Yeah, no, and yes, I can't disagree with anything that you've said. I think that, to play word bingo, regulatory arbitrage is always a risk. So it's in the execution of how the industry itself reacts to these changes, but then how ASIC and Treasury can get together, but also try and work it so that there's that smooth flow between what they want executed and how it actually gets done. So, and that's actually not a bad segue, because now we've actually got now we've got some sort of we've got an idea of what is coming. We've got an idea of what ASIC really wants in terms of, or well, the legislation, the draft legislation coming out. So then we've got the Info 225 sort of, you know, adjacent legislation, and then got the AUSTRAC changes that are coming in March next year. So Angela, this is probably more in your wheelhouse, but you know, there's AUSTRAC's proposals around the AML program and the travel rule and AML program simplification, and you know, more of a risk-based approach, but then there's a lot more oversight required and evidence of that in the AUSTRAC AML CTF rules, whereas ASIC have sort of taken more of a macro view of things. I know there's different definitions, and we don't have time to get into that in all of the little stuff of the digital assets, but really, are we trying to, like, when you compare them, what are your thoughts about trying to strike that balance between consumer protection that we all know is the regulator's gambit, and innovation that Australia needs to keep moving forward?
Lisa, and some thoughts on your question. But first, I think we need to remember when we're looking at the work that ASIC is doing versus AUSTRAC, that the DCE regime that is administered by AUSTRAC has a much longer history. And so now, you know, they're really getting down into the weeds. And I think AUSTRAC's focus with their crypto task force has been a couple of things, focusing on combating scams in crypto ATMs. And then also, you know, the use it or lose it blitz that's focused on shutting off basically dormant as well as non-compliant DCEs. And I think the goal there is really to kind of clean up and focus on those players that are dedicated to compliance, that are good actors, and I think that is good news for the industry. On the other hand, Info 225, I think we still have to wait for the consultation response. But, you know, with the exposure draft coming out this morning, I was taking a little bit of a walk down memory lane, you know, as I had, in the 10 minutes I had to kind of speed read that, some of that content. And I think that, you know, when we talk about balancing consumer protection and innovation, I think if we look at the tone with which the announcement has been made, it's very different, right? In 2023, when the consultation was first published by Treasury, the huge focus was consumer protection, and you know, and underlying that was like combating scams and those things. And now the tone of the announcement is very much around fostering innovation. So I think that's reflective of a few things. One is the overall global environment in which we're operating. I mean, 2023, I think we were dealing with fallout from FTX and everything that happened from there. And so regulators were a little bit cautious. They were more focused on consumer protection. The second thing is obviously some of the geopolitical changes. But I think the third thing is kind of like in this intervening period, that the fact that the industry has demonstrated that, hey, you know, there are players in this ecosystem that want to comply, that want to work with you. And if scams are a problem, we're here. We're here to be good contributors. Like TRM worked with Swyftx to launch a scam education initiative called Learn and Earn. I think, you know, many of these things have taken place in the industry. So it's been a journey. There's been a lot of changes in the landscape, in the tone of the conversations, in the maturity. And I think that has showed in terms of how regulators are now kind of balancing between, you know, consumer protection and innovation. And I would say we're getting there. And this is an extremely good day to be having this discussion indeed.
Look, it's super exciting. We always talk about, you know, we just need some clarity. We just need some direction. We just need clarity. And you know, we're starting to get it. So it is super exciting. And I, my kids would absolutely be so embarrassed if I said this, but I am excited that the regulation came out, and I am really excited to put it all into my GPT and summarize it so I can actually don't have to read every single word. It's going to be great. So, and you know, it's interesting because then we have to look at sort of, you know, okay, we've got these overarching regulations coming out, and we can see what the overall effect is going to be for the industry. But then we do have to delve further into some of the minutiae of it, as I've said before. And I know that ASIC were talking in Paul's previous discussion. There was a mention of like how, for instance, the stable coins going to be managed, and how we're looking at that. And I think that if we look at the practical impact of what these rule changes are going to mean for the industry, I'm going to turn to Delia now and ask Delia, from where you sit, what kind of experiences are you seeing, like at the actual coalface, in practical terms? How is this draft regime going to affect your clients?
Well, I'll have to read it to answer that one, but
Yeah.
I think there's a few kind of overarching comments to make. We have been planning to issue our product into the existing regulatory regime on the understanding that the new regulatory regime is going to take a while to go through the process, what I've heard people refer to in Parliament as the sausage making. This is it feels like this is step 6 because the process of consultation has been going on for about 5 years. But this is really step 1 from the parliamentary perspective in terms of putting out for consultation draft legislation. This is still going to take a long time to filter through. So we made an active decision that we were going to find a way to be able to issue our stablecoin into the existing regulatory regime, which is, under Chapter 7 of the Corporations Act as under the Financial Product and Financial Services regime. Right. So in order to do that, bearing in mind that the 3 founders at Catena Digital, which is now trading as Macropod Global, have a TradFi background. Drew and Rob, our CEO and CTO, ran the stablecoin desk at NAB when that existed. And did, world first transactions in terms of doing transfers of value between banks internationally. NAB, in its wisdom, decided not to continue that stablecoin desk because they were concerned about the uncertainty in the regulation, is my understanding. So Rob and Drew then thought, well, we've drunk the Kool-Aid now. We can see that this is the future of financial services. So we're going to go out and we're going to do this as a private issuance. I joined with a banking and hedge fund background, and having done startups and M&A. So I was bringing the regulatory to it. So we then thought, okay, well, we know that ASIC's position is that these kinds of arrangements are going to need to fall within the existing regime and are going to need to be licensed. We then spent the next year talking face-to-face with the digital assets team at ASIC to try to convince them of our position that it wasn't the token that was the financial product, it was the platform for minting and redeeming would be the non-cash payment facility. We were ultimately unsuccessful in that, but we did take them on the journey of, what this was going to look like, the benefits of it, the consumer benefits of it, the AML benefits of it, the market integrity, the lowering of counterparty risk, the benefits to, Australia as a whole by supporting the dollar, benefits in our local region by helping our Pacific neighbours who have horrific percentages of their, of seasonal workers' wages being lost in remittance costs for just getting money back to the Pacific. The stablecoins solve for so many things that have a public benefit and a national benefit. And I think that's over a period of time being, recognised on both sides of Parliament and by regulators that this is something that does merit supporting and creating a framework for it to exist. So ASIC, with that in mind and knowing that it was going to take potentially many years for Parliament to actually enact the new regime and for that to then be rolled out, ASIC's view was, okay, well, if we can provide, bridging relief to enable this industry to really, commence in a regulated way, as an interim relief until the new regulatory regime comes in. So that was the big news this week, is that ASIC released its publicly its relief instrument to allow downstream use cases of our stablecoin to occur without having to have either a financial services license or a market operating license or a clearance and settlement license, including in relation to giving advice and dealing and custody and making a market. So all of those things. So what does that mean? That means that we are able to have conversations with Jason Titman at Swyftx about getting our token listed on a DCE with a level of comfort that that is not going to trigger licensing requirements.
And Kraken.
Well, there's a range of DCEs out there.
I just had to put it in there. I've just hashtag, I just have to put it in there.
Of course. Well, the beauty of the relief is it doesn't list DCEs. It does it by the types of conduct that would otherwise trigger a licensing requirement if the relief wasn't there.
I know, and absolutely. And I think that goes to what you were talking about this a little bit earlier at the beginning of what you were saying about helping to foster that innovation. This is a way that Australia can actually foster that innovation, and you can see the benefits of that as opposed to increasing the red tape. And I think that is a perfect example of where they've really tried to get that balance right. And
I know there's not a lot of time, but I'll just say in relation to your first question, which was around the draft legislation that's come out, I think it's important to understand that legislation is around really DCEs and custody and service providers who are going to be dealing in stablecoins and other kinds of digital assets.
Yes.
There are two tranches to this. There's that, and then there will be a separate draft bill for discussion that I understand from the previous discussion is likely to come out in a few weeks, which will deal expressly with stablecoins. So that's the one that will, it's obviously important we get our heads around what DCEs will be required to do in the future, but it's really the one that's coming up in a few weeks that's going to have the most interest to me. Now, I'm hoping that it correlates pretty tightly with what Treasury has advised in the past and put out for consultation, as long ago as December 2023. They put out their paper to say how they were going to be advising government on what that regulatory future landscape should look like. And I think what everybody's going to be doing in the next couple of weeks is considering this draft in light of what's been said in the past to see if, in fact, it does do that, or if there's something in there that creates some practical issue that is hard to overcome.
Yeah, point well made. I think we've only got 4 minutes left, so
we'll go quick.
Yeah, it's going to go. Yeah, fun. It all happens fast, doesn't it, when you're having fun? My last question really was about how do we future-proof this regulation so it doesn't kill off innovation. But I really think that the one thing that I wanted to sort of maybe bring forward about that is there going to be, I really don't think we've got time, maybe a quick response from everyone if you can, but is this going to foster an environment where only the big players survive? To Angela's point about, if you don't use it, lose it in terms of the DCE registrations, but we don't want to necessarily create this regulatory moat where we've only got like certain big players. I mean, do you think, just very quickly, if you can, very briefly, Angela, what are your thoughts on that?
So I'm in Korea right now, and I was asked the same question on another panel yesterday night.
Perfect.
Yeah, so it is something everyone around the world is thinking about. And my response was, with great power comes great responsibility. And just to draw a story from Singapore, when we licensed the first few crypto exchanges, one was run by a major bank, and then one was Independent Reserve, which you guys all know, and then one was a homegrown crypto exchange. And the kind of concerns and due diligence that regulators have, given the different companies that were behind the same business model, is very different. Yeah. So big players will always have more scrutiny on their activities. The second thing is, let's like it with the user elusiveness. Let's not confuse dormant with small. I think what Austrac is trying to do is there are all these DCEs that have filed for registration and they're not actually doing any of the activities. So I think I don't think the intention there is to stifle small businesses. And I think regulators in Australia, whether it's Austrac or ASIC, they do have an understanding that the kind of regulatory scrutiny and expectations that they have are proportionate to the size and the scale of the business.
Yeah, agree.
I'd
30
sort of
seconds,
add to
Jason?
that and say that, listen, I think there's always a risk, moving into the regulatory environment and AFSL, etc. It is going to push up compliance costs. That will give some more protection around consumers. It will make it harder for smaller players that haven't got scale. But you're right. I think, we want to be careful creating such a moat that only the bigger players can survive, because we've seen that in the existing financial services TradFi, and we see what that does to consumers. They don't necessarily get innovation and they don't necessarily get good product. But I think it's a mindset. It really is about a mindset. We've got multiple regulators in this space as well. So, they've got to work out how to play on that field. And I think we saw, a conversation even a week or so ago. We've got to work out, are they playing a coaching role, or are they playing kind of that, really penalising mindset? And if I look at it from what else can we do from an innovative sense, like him or loathe him, that Trump's done sort of about 6 things for the industry. Make it, crypto capital of the world. Talked about the Genius, or put Genius Act, Clarity Act in. We've got Crypto Task Force, 401ks, changed the blockage that was there in the SEC and has done the no harm test. And then I would argue getting out of the way and letting industry do it. So they're the sorts of things that I think we can look to help foster that innovation, to that question you ask.
Yeah, agreed. I'm sorry, Delia, we've run out of time.
Oh, that's
But it's been half an hour. Listen, just to sum everything up, I think that this conversation can obviously go on for a lot longer than we've had. So thank you all to our panelists. Really appreciate the time that you've taken. And thanks to Amy Rose for allowing us to have this conversation. Now we just have to create this great framework for trust, innovation, and global competitiveness. Where to next? Thanks so much. I appreciate it.
Thank you.
Thanks, Lisa.
Bye.
Thanks so much, everyone. Look, that was a really timely conversation. We have a lot of work to do, and we have to do it together, to your point, Lisa. I encourage our members who are watching today, we'll be sending out an email tomorrow with just the coordination response around that consultation. And obviously we do welcome all views inside and outside of membership, so we get a really good understanding as to what the consensus is in the response. So thank you so much.